Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So all of the action today was pretty much in oil and in energy related stocks, as the S&P 500 is pretty much patiently waiting for the FOMC, which is in less than 48 hours from now. Keep in mind that the discrepancy between SPY and the SPX cash levels are because SPY will be issuing a dividend and the price will be cut to adjust for that dividend on Friday. So daily consolidation is underway with the gap down open, but bears didn't get much follow through, and that was because XLF, the financial sector, didn't hit a new low of the day. So we had a period where the S&P 500 hit a new low of the day, got no follow through. QQQ hit a new low of the day. SPY bears got a little bit more follow through, but XLF never rolled over and never broke its low of the day. And we know that both QQQ and XLF have to be going in the same direction if we're going to see a significant S&P 500 move. So as soon as it became clear that XLF is probably not going to break the low of the day, we could surmise, I don't know if that's the right word, but we could infer that the S&P 500 probably wasn't going to see too much further downside. So anything above 295.97 is a daily higher low on SPY. And the resistance is 302.46, the all-time high, keeping in mind that the S&P 500 itself, not the ETF SPY, the S&P 500 itself has not hit an all-time high yet, and we're pretty much going to be heading into the FOMC with a daily double top on the table. IWM continuing to hold strong, very healthy daily consolidation, potentially a bull flag at this point. When we lose the hourly uptrend and the bears don't get significant follow-through, that's when we look for a bull flag, and that is possible on the daily chart right now. QQQ, pull back a little bit more significant, must hold a daily higher low compared to 188.91, and we're watching the potential of a head and shoulders pattern as well. If this pullback gets any more significant, we're going to be watching for the potential of a left shoulder, head, and if we bounce, can't break the recent high, and then lose the daily uptrend, that's something we'll be watching for. But in my opinion, that would require a bearish reaction to the FOMC. Some of the tech sector names are not positioned well if we have a bearish reaction to the FOMC. And if we look at Amazon on the weekly time frame, we're going to be in a weekly downtrend, in my opinion, if the FOMC gives a bearish market reaction. We have our weekly higher low, a weak bounce, and if we roll over and break the August low, that's in play. That could potentially happen. That's only about 3 or 4% to the downside. Another name is Facebook, looking the same. So if Facebook rolls over, we'll be in a weekly downtrend. When's the last time we were in a weekly downtrend? Before the December bounce and climax. So it will be notable to me if some of the major names in the tech sector lose their weekly uptrends and the S&P 500 has a double top. So again, we are heading into this FOMC where if I had a long-term retirement portfolio, I would absolutely want to be hedging for at least a couple days afterwards, just in case, because risk to reward favors risk, in my opinion, with where we stand right now on this daily time frame. XLF still holding on just fine. Daily bull flag is trying to form. And again, it was the pullback first thing. We set the low of the day in the first 10 minutes of trading, and we never hit a new low. And bulls were able to hold on from there. So very healthy daily consolidation. Short-term support will be 28.21, and the bulls need to break 28.60 to confirm the daily bull flag. And you could make the argument this is a cup and handle pattern, and we're trying to form the handle right now because the right side of resistance was unable to break the left side, and IWM is similar, unable to break the left side of resistance, now trying for a daily bull flag to follow through. So that'll be key for IWM and XLF in the short term as to whether or not they're able to confirm and break those resistances. XLV is looking for a daily higher low compared to 89.02. Bulls will have to see an hourly trend change to be confident. And to see an hourly trend change, we need to break the high of today tomorrow. If we do not do that, then we're not confident the daily higher low has been established yet. XBI, very strong and significant follow through. XBI today stood out as a lead bull. It was up 1.75%, while the tech sector and the biotech sector, or I should say the tech sector and the financial sector, were both down an average of 0.4%. Very big difference. So our daily high or low is now 81.81. We broke resistance, confirming this little bull flag move, and now we're looking up at 84.63 as the next resistance level. The VIX started with a higher open, getting a little bit of a bounce underway, but anything under 1650 is just a lower high. So it's all about 1650 resistance and 1350 support as we head into Wednesday. Gold. So gold's not really clear on the 4-hour time frame. The daily chart, we have our low, high, higher low, lower high. So I know there's an equilibrium somewhere out there. I just have to find the time frame that shows it the most clearly. And I don't know what time frame that is. 9-hour. The 9-hour time frame. I've never used the 9-hour time frame in my life, but just for clarity's sake, this is our low, high, higher low, and it looks like the lower high was set at 1512. And now we're pulling back and looking for a higher low compared to 1485. I would not be surprised to see this range continue to tighten into the FOMC, where we're going to look for a significant reaction in the dollar, in metals, in miners, and in markets, specifically the financial sector. Silver had that daily bear break, much more significant than gold did. If we look at the 9-hour just as a comparison, it's a clear downtrend of lower highs and lower lows rather than a tightening range. So we're looking for a lower high to be set. We have a double top at 18, 1797, 1798. So a double top just under 18. I'm looking at our high, low of the dump. 18 may be our lower high. If we pull back and break 1774, then we'll have a 4-hour equilibrium to be watching on silver. So there is a notable difference in the setup between gold and silver at this moment. Oil with a huge move today, that's where the volatility was for trading today. We consolidated from the pre-market pullback. We saw the bulls show up heading into the open. We saw some significant bull spikes up and then some significant profit taking at the end of the day. There was absolutely opportunity in both directions. I personally flipped bearish a couple times and went 2 for 2 for a bit of a day, a little over a day maker. And that was just because I was comfortable looking at 2-minute time frames being extremely overextended on the way up and just some short-term trades based off of that. But bigger picture, weekly equilibrium has broken bullish based off of news. And that is an 11-month pattern breaking bullish. Now we're looking up at resistance of 63.79 and 66.58. We've already broken 2 resistance levels as far as I'm concerned. We had resistance of 57.43, which was a higher risk, higher reward signal. Now we broke 60.91, and now it's only 66.58 to give us the highest price that we've seen in 2019 if the bulls are able to keep this up. Daily time frame, wouldn't be surprised to see an inside bar form tomorrow. As we are pulling back, we'll look for a 4-hour higher low compared to 58.72. But if we pull back and we're to start tomorrow morning with a decent amount of resistance above, a few percent, I wouldn't be surprised to see a daily inside bar form. But watching the 4-hour trend for now and watching to see where the 4-hour higher low forms. Hourly is still an uptrend. We can watch the hourly chart. Anything above 59.93 is an hourly higher low. If we lose the hourly uptrend, then we'll zoom out to the 4-hour chart. Look at these exponential supports. And it was the 15-minute time frame that had a great bounce. Exponential support held on the way up. Quick pullback into the pits closing. Bounced right off that exponential support. And now the hourly time frame. 12-period exponential has already held, and we're heading back down to test it again. Natural gas daily bull flag confirmed. Really nice move by the bulls following through. 251 is now our benchmark level on the daily chart to keep the bulls in full control. And the next resistance after 270, we're going to be looking at 272. After 272, there's space again. We'll then be looking up at 277, 289. Daily uptrend is the most important. 4-hour uptrend. Actually, short term, the most important level is 2638. Pretty much a triple or quadruple bottom. Lose that level, and daily consolidation will probably be underway again. As you can see, that's the line in the sand short term that the bulls want to maintain. And we'll see if they can do so overnight. So, probably not going to be doing a whole lot of trading aside from commodities until the FOMC reaction, because I'm anticipating things to be pretty contained until Wednesday midday. And we'll see if we can get some more volatility in oil and natural gas to continue playing these leveraged ETFs. Again, the leveraged ETFs, the amount of ranges that we are seeing within any given day is just great for day trading. And UWT today, that range was 15%. Again, if I'm only looking for 1 or 2% and I had 14% of range to work with, I don't have to capture anywhere near an entire move to make it worthwhile. Thanks again. Have a good rest of your day. Do good things out there. We'll check back in tomorrow and we'll end it with a bit more Iceland.